What is going on, crypto people? Welcome back to the Traveling Crypto. If you are new to the channel and you like the content that you see here today, go ahead and subscribe and leave a thumbs up if you were so inclined. So what I wanted to talk about today was a really important topic because it doesn't only relate to the crypto market, but it relates to the overall economy. So I'm sure you've been hearing in the news that the stock market is breaking all kinds of records. The S&P is at an all-time high. The Dow Jones is at an all-time high. U.S. household wealth is breaking all kinds of records. I think it reached the $100 trillion mark for the first time ever. Obviously, this growth is not sustainable. And there are a few indicators that some chief economists are looking at, and they're expecting a market crash within the next 2 years. One of the main indicators is that household net worth is growing at a lot faster pace than incomes are. And that is usually an indicator that a crash is on the horizon. That, and if you look at some housing indicators as well. Here you'll see that the S&P 500, the price to sales ratio, which is just the stock price in comparison to the sales of the company of that underlying stock, is the highest since the dot-com bubble. The dot-com bubble, obviously, we saw the highest price to sales ratio because it was an emerging market. People didn't really understand it. And none of these companies, even companies like Amazon, they were not profitable at the time, yet their stock price was rising so high because of what we now coined in the crypto sphere as hopium, right? So we are now at the highest price to sales ratio since the dot-com bubble, which is also another indication that we are in another bubble that is about to burst. Now, what does this mean for crypto? So we don't really have any data that gives us an indication of how traders will react to Bitcoin and to crypto if the stock market crashes. And this is mostly due to the fact that crypto is such a young market and Bitcoin in and of itself is so young that we haven't seen how it reacts through market crashes in history. Now, we have had a few corrections in the stock market since Bitcoin has been around. And by few, I really mean one, which was in around 2011 between sometime in the middle of the year and the end of the year, like May and October of 2011, we had a market correction in the traditional markets. It wasn't a market crash like what we saw in 2008, but it was a market correction. And Bitcoin obviously was around in 2011. If we look at the historical prices of Bitcoin, you'll see that during that period, Bitcoin actually went from $1, right, in early 2011 to $31. So 31 times its value in the middle of 2011. Now, this could be correlation without causation, right? So while I don't think it's a complete coincidence that during this market correction in the traditional markets, Bitcoin took parity with the US dollar and followed with a parabolic 31x growth, we kind of have to take that data with a grain of salt, right? Because as we just said, Bitcoin hasn't been around for a long time. And, we've only seen one real market correction in the stock markets or in the traditional markets since Bitcoin and crypto have been around. So then the natural question pops up is how does gold react during market crashes, right? Because Bitcoin is seen as a store of value. It is seen as digital gold, except for those grumpy naysayers. We want to take a look at how does gold react during traditional market crashes. And we have this graph here, and you'll see that this outlines the biggest S&P 500 declines since 1976 and how gold fared in those market crashes. Now, in every single one of those crashes, except for two, gold has actually risen during those market crashes. And the only time it hasn't significantly was in this period between 80 and 82, where gold declined 46%. Now, this isn't telling the whole story because gold actually saw a 2,300% rise from 1970 to 1980. So this was coming on the heels of the biggest bull market in gold's history. So this correction for gold, that coincided with the market correction itself or the market decline was actually a valid one, right? Because it came at the top of the gold bubble at that time. But in general, you see that we have enough of a sample size to say that gold is a great hedge against the traditional markets. There's an inverse relationship between the value of the traditional markets and the value of gold. Now, silver, can't really say the same for silver, so we're not even going to touch on that topic. But That is how gold reacts to market crashes. One thing to consider also is that more and more millennials are trading right now, right? So if Bitcoin is seen as a store of value by millennials, the way that we and our parents saw gold, then we might see a similar reaction when the traditional markets crash, that people will start hoarding Bitcoin in the way that they do gold. And again, we do have that data segment from 2011 that shows us that Bitcoin went from $1 to $31, within that window of the stock market correction. All right, let's move on to the next news story. Shapeshift CEO, this is of course Eric Voorhees, said that the Bitcoin drop beneficial in building market foundation. I get what he's saying here. If you want to read his quote, it says, bear markets are for builders, the calm, the quiet, the disillusionment, while the fickle and fair weather peer around with nervous insecurity. The builders become the market's foundation, preparing the mortar and stone for tomorrow's towers. Very poetic, Eric. Very poetic. But I do get what he's saying. Basically, if you see those charts of the psychology of markets, when everybody scurries away, right? When everyone gets scared and enters into the phase of capitulation or depression, the ones that stick around or start buying when the market crashes are the ones that are building the foundation for the market when the next wave occurs. Another fun fact coming from the story, over the past 8 years, we have had 5 corrections in Bitcoin, 2010, 12, 14, 16, and 18 being this year. And although it doesn't seem like it because we're dealing with such high dollar amounts, this is actually the smallest correction in terms of percentage loss. In your mind, you see that Bitcoin hit 20,000, you're like, oh my God, we went from 20,000, we're 6,000 and change. But in terms of percentage drop, 67%, while that is significant compared to 2016, 14, 12, and 2010, it is the smallest percentage drop that we've seen thus far. And just going back to Eric Voorhees' quote, I want you to think of one thing, and I keep saying this on the Discord, our trading community. If you want access to that, link is in the description. When you are selling at this point, right, during a bear market, when you are selling, think of who the buyer is on the other side. Who is buying that Bitcoin or that Ethereum or Litecoin at that price? There's somebody interested in picking up these assets at that price. Who is it that you're selling to? Most likely at these prices, you're selling to somebody who understands that this is the time to buy, right? If you look at a lot of these successful traders in history, it's not like Warren Buffett is sitting there looking at TradingView. He probably doesn't even know how to fire up his computer, but he knows the fundamentals of successful trading, that you want to buy when everybody is selling and you want to sell when everybody is buying, right? Most people involved in trading have a herd mentality, that they're just following the herd. I mean, I see it all the time on the Discord, right? You see a cryptocurrency gain 5% or 10%. All of a sudden, the question pops up: why did this cryptocurrency rise in price? Should I get in now? Is this a good time to get in now? There's this human inclination to always want to jump on the wave and not miss out. That's what we call FOMO in not so sophisticated terms. And when the price starts dropping, people panic and sell. Who is buying at that level? Just think about that next time you sell. Now, if you know me, I'm not a fan of hodling, blind hodling at all, right? You should set limits. You should set stop limits. You should, be willing to only lose a certain amount on your trade. But I'm just trying to get you to think in general, who is buying a bear market? All right, moving on to the next story. Bitcoin still in the middle of a bear market. Next. All right, moving on to the next story. Commissioner, SEC shouldn't hold back in approving crypto products. This SEC commissioner here, Hester Peirce, immediately became the most attractive woman in America to me. She was basically saying that government regulation should not be a precondition to allowing crypto products in the market. And I completely agree with her. So as you all know, there is that possible Bitcoin ETF decision at the end of September, which could get pushed out. Most people in the industry don't think it will get approved. The last ETF rejection we saw didn't have much of an effect on the price. So from my standpoint, I really think the ETF rejection will not have such a drastic effect on the price, but an approval approval will definitely have a drastic effect on the price. And lastly, in more good news for Ripple, top 10 US bank joins Ripple blockchain, RippleNet for cross-border payments. No, this is not XRP or XRapid. This is RippleNet, the same global payments network that they've been signing banks onto. Ripple, as you know, has stated that they are planning on launching XRapid within the next month or two. It'll be interesting to see if they can get some of their RippleNet customers onboarded onto XRP and whether they can sign new deals on XRapid. Lastly, we will go into some Bitcoin analysis. If you look at the weekly chart for Bitcoin, you'll see that we are forming, again, this perfect descending triangle. Even the wicks of these candles right here are touching almost at exactly the same price point, even though these are weeks away. But yeah, I mean, this is as perfect of a descending triangle as you can get, really. Sorry if I'm drawing this really sloppily, but yeah, I mean, this is a descending triangle, and we are now reaching the apex of that triangle, and we have to, I guess Bitcoin has to make a decision as to which way it wants to go. And I keep saying this, don't discount the possibility of sideways trading either. You don't have to break up or down every single time. There is a path for a sideways channel or a range bound channel breaking out of this, which is also a possibility. If you look at an intraday chart, like the 4-hour chart, you'll see that Bitcoin is currently forming a bear flag. You can actually see it better on the daily chart. You'll see this bear flag here that Bitcoin is forming. Now, a breakout from a bear flag is usually to the downside. However, we don't really have an indication that Bitcoin wants to fall below 6,200 at the moment. And as you know, the 2018 support, the strong support, is at 5,800. We haven't really broken below that or closed below that in 2018. So here is what the bear flag looks like right now. This is on the day chart. Obviously, we do have that larger descending triangle pattern on the day chart as well, if you go all the way back to January. But, one thing that I'm interested in is what happens to these shorts here. And let me just make this easier for you to see. Let me just change the style. We'll do line, and we'll pick a light color. So here's what the shorts look like. And shorts are near an all-time high. I think the time in April might surpass this just by a tick or so. But we've never seen shorts form this kind of triple top formation here, this triple top pattern here. And they're really, there are a lot of short positions open, again, near the all-time high. So it'll be interesting to see how this dynamic plays out. There hasn't been enough price action formed here. It's been rather stable to see the effect of the shorts take place. Either, in the form of short squeeze, if the prices rally, we'll see, I think, a pretty violent short squeeze just because of the number of shorts that are holding out here right now. But a drop in price also, if this bear flag breaks down and we somehow surpass or go below 6,000, we could see the effect of these shorts winning out take place with a further price drop. So we are in a rather tenuous moment. It seems like, you're playing that game Jenga, the game where you're pulling out the blocks and seeing at which point the tower will fall. That's what it feels like, the battle between the shorts and the long positions on Bitcoin. Either way, most of my money is currently on the sidelines. There are a few trades we're making here and there. If you want access to the trade alerts, link is in the description. Sign up to get those. And just remember that cash is also a position. So just because you're not actively trading doesn't mean you're missing out on something. Cash is also a position. So just remember that until cash dies, obviously. But anyway, that is it for this video. Again, if you liked what you saw, go ahead and leave a thumbs up. Leave a comment if you have a question or a comment. Hit me up on the Discord. That's the easiest way to get a hold of me. Sign up to the trade alerts if you want access to those. Link is in the description. Stay safe out there. Peace.